All right. Good morning and welcome back to the first session of the week, Sydney Tokyo overlap. It is 7 p.m. Eastern, and let's get started off with the Euro USD daily chart as always. Mind you, we also want to review the Dow Jones today, as we've been telling you time and again that we've been watching the trade setups there, and we would like to get an appraisal there as well. So we'll review euro followed by uh, dollar index, GBP USD, uh, gold, and Bitcoin and Solana. Weekend uh, entries have been triggered as well. And finally, we'll also touch base with the Dow Jones. All right, so let's get started off. The daily chart in the Euro USD has been confirming a larger degree uptrend with an impulse higher followed by a corrective lower, and that price has bounced exactly from the Fibonacci 61.8% on the 13th of January. That's almost more than a month back, and since then it has always been on the long side. We have always protected on the long side, and it's been positive till now and going forward as well. All right, now we bought euro again during the New York session on Friday in anticipation of a corrective decline, which now looks complete. We did have a drag through the 1.0451, but it's okay. We've re-entered. We've taken long positions again. We've added to the long positions. So we are in the trade back again. The euro on the long side. By any chance, if you are still sitting on the sidelines, then it's not a bad idea to take on the long side even here. Or possibly you might want to wait for a corrective decline towards 1.0340. But tell you what, if the third wave, because if the third wave is beginning, or if the third wave has already started, because what we see right now, as far as the wave structure is concerned, is a lower degree wave 1 that is of minute degree, followed by a minute degree wave 2 ABC. That's Those are the minute degrees. uh, it's complete. So wave 1 and wave 2, 5 up 3 down is complete again. And if the third wave is beginning to unfold, and there are multiple degrees actually. One is the third wave of minute degree, and the other one is the minute wave 1, 2, and then again 1, 2, and then again 1, 2. So multiple third waves are, if they are unfolding, then euro is not going to give any chance to go long, maybe from the lower levels. All right. So always please try and hold something on the long side, and it's okay to give some room for correction. If it's carving a complex WXY or a combination, that's what I'm saying. Not WXY, it's just a labeling. But if it's carving a combination, let's give it a chance. If prices decline towards 1.034050, but otherwise, it's always good to remain at least partially on the long side. All right. So that's the trading point of view and the lower degree waves point of view. It's quite possible that the third wave is underway, and it might not give us a chance to get on the long side going forward. Alright, so partial longs can be taken right now. Please remember the stop loss technically still goes below 1.02. Ideally, I would say it goes at 1.0150. Alright, so let's go back to the dollar index now. And as always, we will start from the daily chart. Alright, what you see on the screen flashing right now is the daily chart of the dollar index, which completely confirms that the larger degree trend is down. You've got wave 1, 2, 3, 4, and 5, followed by a corrective A, B, C rally. Not only that, you get that replica. Because it's a fractal nature. The Elliott wave is a fractal nature. It's unfolding that fractal nature of the market. So you've got the five wave of larger degree, of minor degree, and then you've got the five wave of minute degree as well on the hourly chart. So as father as son, all right. So five waves down is complete here. Let me take you guys on the hourly chart again. So those are the five waves down, followed by three wave up, and once again further. That could be wave 1, wave 2, and again wave 1 and wave 2. So it's either A, B, C. See, there are multiple combinations possible. Well, last week, what I was foreseeing is that a corrective ABC and another corrective ABC on the long side can complete the entire combination correction. Okay, but this labeling might confuse traders that dollar index is rising or rallying or going to rally. It is not actually going to rally. What we were trying to say was there could be a pullback. But to clear up the air completely, we remove this ABC. When it happens, we will relabel. Okay, so it's not just a corrective wave ABC on the downside, but actually a multi-degree wave 3 could be in place. Like like we've got wave 1 and then wave 2 and then again wave 1, 2, one of again wave 1 and 2, maybe multiple wave 3 at multiple degrees could be under play. All right, I think these lower degree waves are still okay, and maybe wave 3 is going to continue lower from here. So trading point of view, we would not suggest to wait until prices are back towards 108. If they are back, we can always go and add for the shorts, because I still fancy a combination being worked out. But the overall trend, the overall pressure is going to be on the south side. So please have at least some position. It's already 106.43. Remember, we took our last shorts at 107.10. All right. I think it was on Thursday or Friday. I don't remember exactly, but 107.10 was the last one, and the first target was hit almost, and the second target is 105.60 on the near term. So if you're still holding those short positions, it's okay. If you book profits, then not a bad idea to take at least partial shorts right now. Trading point of view is always good to have some equity on the short side and give it some room for a pullback towards 108, and that would be a nice place to go short again. All right, stop loss. Technically, again, please remember it goes above the 3rd of February high, whichever provider you are trading with. For example, this is 8 cap chart. Technically, the high goes above 109.85. uh, Whichever provider you have been trading dollar index for or with, the 3rd February high would be the stop loss. We will remove the stop loss, we'll be in a position to get the stop loss lower just in a while. We need to see a pullback and then a correction and then a continued drop. All right, so we'll wait for that to happen. But stop loss is not a worry now because we are we are quite confident and convinced about what dollar index is going is about to produce. All right, so let's on the short side for firmly. This guy is firmly placed on the north side actually, and that is pound. Okay, I think we've done on the FXCM chart. Let me find out. Yeah, a 4-hour time frame would be perfect for pound. So is it? It's like wave 1 and 2, 3, 4, 5. That's the first impulse, and then a neat little correction, wave 2, and once again the third wave is already begun to unfold. It looks nice actually, and price action is neatly placed as well. You've got wave 1 of 3, wave 2 of 3, and the third wave is is either complete or still underway. All right, but I think if the third wave is complete, then we'll have a corrective wave 4, a slight decline towards 25.75 again before the rally continues. But mind you, 1.28 is a near-term target, which is not too far away at last, 26.50 on the bar. And then price action is going towards 1.3 and 1.33. No change in the direction of trade. Pound is always good to be bought on corrective declines, and the strength in pound, as we kept on saying across the last week as well, the strength in pound is quite better as compared to the euros and the dollar index. The corrective declines are quite shallow. All right. And if we do have a look at the daily, just to give you a quick idea about what pound has done in the past years, is the larger degree trend is up with wave 1, 2, 3, 4, and 5, followed by an ABC expanded flat corrective decline. All right, and thereafter, what we have on the right hand side is is the story which we have already seen in action on the 4-hour chart. So please remain on the long side. The stop loss in pound again repeatedly goes below 2250. Nothing more than that, nothing higher than that, please. Ideally, it should go around 2100. But if that is wave 2, we are good to remain just around that price. All right, pound is done. Gold now. Just take it. Take it. We would change, or the alternate path could be. We'll discuss the alternate path as well today. That's wave 1 and 2, and extended wave 3. Now we've been talking about wave 4 as an expanded flat, and wave 5 somewhere in the making, correct? I'm not very sure that the expanded flat, which we have been calling, uh, which is looking stretched actually, and could be an expanded flat in the making. If that is the case, then we still have wave 4 in the making as a minute ABC, but we got to keep the alternate count also in mind now. All right, one is this is the one which we have anticipated, correct? At a minute degree. So if it is minor wave 4 in the making, normally wave B of an expanded flat would not stretch to 61.8%. In this case, it has done that. You see 2951. Ideally, it would have been around 2890, which is the 38.2%, but it has stretched quite far around 2951, and prices are stalling right now around that same level. So it needs to drop from here if the expanded flat is still under making, and it has to drop in a larger degree 5-wave structure to extend its drop all the way towards 25. All right, that's the overall view if the expanded flat is in the making. And also, not only that, but we have to see price action confirming right now. Let's move on to the 4-hour chart. And that price action confirmation needs to be an absolute break below, which is that wave 4 termination, 2875. A break below 2875 could be the first step or first confirmation of a major top in place, and corrective correction, a deeper correction is on its way. All right, so first things, aggressive shorts, which we had recommended with a stop around 29.57 or so, they still remain active since the price action is already 35, and we sold around the same price of 40, somewhere in the 40s, or we recommended to sell around 38. So that trade is still on, but be wary if the alternate path is unfolding, so that's the major, that's the preferred count still, but the preferred count will only last if prices reverse from here. Any print above 54 now would absolutely rule out uh, an ABC at a minute degree, correct? Okay, what if wave 4 is in place here? Already in place. That means the fifth wave is progressing higher. And if the fifth wave is progressing higher, then the subwaves within the fifth wave would be like this. Maybe have the wave 4 and we got minute 1, minute 2, maybe minute 3, and that would be minute wave 4 in the making, and the fifth wave thereafter. We just need to change this degree to minute, minute. And wave 4, right? So you got wave 1, wave 2, and then that could be minute wave 3. It's slightly stretched, but it's okay. It was 2890. And we've got this minute, if this minute wave 3 is in place, then I'm trying to figure out if there is a corrective decline underway, then until what price can we expect that correction to last? So if minute wave 3 is in place, then at least minute wave 4 would decline or drop towards the 2800 mark. And here's the channel as well. So we keep both options open. Minute wave 4 coming back towards 2800 mark, and then proceeding higher again. So keep an eye on 2813 going forward, but for that to remain a possibility or a good possibility, we need to see prices staying below 54 all the time. All right, that's the story in gold. So aggressive shorts may remain shorts on the short side with a strict stop about 54, and conservative players might want to get some price confirmation on a break below 28.75. Once that is gone, we can sell again on a rally. All right, that's the conservative trading strategy. Okay, so that's the story in gold. We've got three more charts to review. I'm going to bring up Bitcoin now. So Bitcoin, it's a good one, right? We've got wave 1 and wave 2 during the weekend coming quite sharp. So it has triggered our long position already around the 96 900 mark. It went up to the bottom of the range as well, around 95,000. So we are long again in Bitcoin. Uh, that looks a neat little potential wave 3 in the making now towards 109. thousand. All right. So please remain on the long side with the stop loss could be placed just below 93. It's okay to place technically correct. I've suggested I've placed below 89 on my portal. In my portal, and Solana on the other side. Once again, Solana has okay, it has declined, but it is now completing an ABC possibly. So that arrow could be shifted on the right side slightly. The stop loss could technically go below 160. I've suggested 155, and we are actually long from 73. That's the second price, which is already triggered again around 166. All right, so it could hold on to the long side as well, and at least towards 212. Or the only thing or question is if that five waves is the first of the decline, then we need to be careful around 212. All right, that's the hourly. Okay, it's not required here. And finally, what we had seen on Friday is the Dow Jones coming coming it coming down very swiftly, and that arrow might not be required, as it could be a multiple degree wave two already in the wave three already in the making. So what is now required is maybe we have good to be on the 4 hour chart, but that particular high, if you notice, did not carry through the previous high. And the aggressive shots which we have taken, they are back into picture with the large degree counts as follows. If we take this as a minute wave 1 and 2, then we are quite confident about 3, 4, 5 lower, but they are not stopping anywhere closer. They're actually going much lower. We've got to be so I'm now adjusting the counts as follows, and we're going to keep this count as it is. Please don't be surprised at all if we are going to see prices declining towards the 37. Remember, we were talking about 37 a few weeks back, but then that almost a test of the previous high. So we actually we held ourselves for a while and waited for this triangle to unfold, otherwise a new high to unfold. But it wasn't a new high. It took its own time to unfold its triangle. So it's wave one and two. Where's the two gone? Okay, here it is. And then we've got possibly we've got wave one and A, B, C, D, E, maybe wave two, and now we've got again wave one and two, and the third wave is on. So uh, at least at the three different degrees we can see on the same chart. So it's going to be a much deeper fall, and the only thing now we need to do is hold on to the short positions, right? Without doing much. So 44,000 shorts are active. We've pulled out another one into the portal because we hadn't pushed into the portal earlier. I think we are short from 43, 800, 900 in the portal as well. The stop loss 45, mid 45,000. That remains that remains the preferred structure for Dow Jones going forward. All right, so I think the bears are fiercely back in business, and it's just a matter of time before prices decline all the way towards 37,000 going forward. All right, so those are the stories as we move into we bring this first session of the week to a pause, and we'll be now back after a few hours during the London times. And until that, once again, thank you for being here. Thank you for your presence here, watching the first session for the week. And good luck to your trades and take care and God bless. Goodbye.